Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside. Wave 4 in this scenario is finished and we're looking for an impulsive wave 5 in a 5-wave structure where this is the most common target area for wave 5. The 1.236 to the 1.618 is taken with a Fibonacci from the high of 3 to the lowest low of wave 4. The first 0.618 here is taken from the low to the high of 3 to this particular low over here for a potential WXY with inside Y a zigzag finishing down here. And the second 0.618 at 55k is taken from the low to the high of 3 to the higher low of this range over here, where wave Y could then be a potential triangle. So that is the reason why I have both of these on the chart, giving us a big range between 46.1k and 55.6k. If we then zoom in to this structure and we go to the 2-hour time frame here, then the scenario that I have on my chart now is the scenario where wave 4 ended with the higher low. So we have a W flat X complex structure and then we have a triangle in wave Y. In this particular scenario, we are then looking for an impulse to the upside from the low of wave Y, where we're looking for wave 1, 2, 3, 4, and eventually a wave 5 to finish the bigger green wave 5. The most common target area for a wave 2 is between the 0.5 and the 0.786, taken from the low to the high of this wave 1. The 382 has been tagged and is a less common target for a wave 2, but a target nonetheless, and the 886 is a rare target. Now, something that I do keep my eye on is the volume over here, because if we are looking for an impulse in wave 1, preferably we wanted to see a 1, 2, 1, 2, 3, 4, 5, 4, 5. Reason being that the highest amount of volume is currently in the high over here. It is in the latest move to the upside, and preferably with an impulse, we like to see higher highs made on lower volume, where each new high is then a potential wave 5 on lower volume, right? The only way to get the highest amount of volume at the high of an impulse is if we have an extended wave 5 and then a 1, 2, 3, 4, 5. So that is something I keep in mind. If we go to the second bullish scenario, then we are looking for wave 4 ending over here. Now we have a flat X and then a zigzag in wave Y, which created the low for then a wave 1, 2, 3, 4, 5. In this scenario, wave 3 is very short. Usually, wave 3 likes to go to the 1.618 trend-based fib extension, taken from the low to the high of 1 to the low of 2, which is sitting at 50k. But in this scenario, this wave 3 is shorter than wave 1. If you at least take this trend-based fib extension from the low to the high of 1 to the higher low here, the end of wave 2. If you would put it on this wick low here, then the wave 3 is longer. But what is important nonetheless is a wave 3 is not allowed to be the shortest wave in an impulsive structure. So if you would put the 1-to-1 on the higher low pivot of 2 over here and wave 3 is shorter than 1, then wave 5 is not allowed to go above the 1-to-1, which is sitting at 49.6k, which for me is not that likely, as we are then so close to 50k as well, even though we do have some nice resistance here consisting of, for example, the very high time frame, the macro value area high of the range in 2021. Now, in this particular scenario, we are then looking for a wave 4. Common target for a wave 4 is the 382 to the 05. The 0.618 would be an invalidation. And then we are looking for a wave 5 to the upside. Now, previously, when we were looking in the previous video this morning at this structure to the upside, we had the potential as over 1, 2, 1, 2, 3, 4, 5, 4, 5, as explained earlier. But what I didn't mention just now is that price hit the 618, which you take from the higher low over here, so from the second wave 2 to the high, because we are looking for a 1, 2, 1, 2, 3. So the first wave 4 should be of the same degree as the second wave 2. However, a wave 4 is not allowed to hit the 0.618 as it lowers the probabilities of a wave 4, and also time-wise, this range is very, very long compared to this wave 4, lowering the probabilities of this particular structure, right? And that is why the probabilities for the other bullish scenarios then increase. Now, in the bearish scenario, we actually like to see the most amount of volume in the latest move towards the upside, because this is more like wave C-ish compared to impulse-ish, basically, right? Wave Cs do like to end on a high amount of volume. It is uncommon for an impulse, but it is quite common for a wave C. So therefore, we can definitely not disregard this particular scenario where either the high here is then a wave 5 or a wave B. If wave 5 is this high over here, we're looking for a flat in an ABC. If, however, we're looking for this to be the wave 5, we're looking for also an impulse to the downside. So in both of these scenarios, you would look for an impulse down, which therefore it doesn't really matter what the high is, as we will find out later during the potential retracement if we continue up and it is a wave C down, or if we continue down for a much bigger retracement. What is not that nice, however, in this scenario is if you would put wave 5 over here, then we have an ending diagonal which is expanding, and expanding structures generally are rare. So unless all of the other scenarios fail, that is when these probabilities, the probabilities really start to increase. If you would put wave 5 over here at these highs, then you also still need to count this as some sort of an expanding structure. So at the moment, therefore, it's not preferred, as expanding structures tend to be more rare, but we cannot forget about this potential scenario. But in both cases, if we're looking for a top over here, and we have to look for an impulse down, then the lower time frame, this local range, have to give us the signs for an impulse to the downside. So let's then zoom in to the lower time frame and observe what happens here. Now there's 3 ways for price to move to the downside, right? You have an impulse, 1, 2, 3, 4, 5. Well, that is not possible. It's way too rangy, a lot of overlap as well, which isn't allowed in a traditional impulse. Then we have to think about a diagonal or a double 1, 2. And of course, a double 1, 2 starts a bigger impulse to the downside, but overlap is allowed. If in front of us we look at a double 1, 2, then we have a wave 1, 2, 1, 2 continuation down, where the second wave 2 is then a flat in a wave A, B, and a wave C. In this scenario, you can see, however, that this green wave 2 hit the 886 Fibonacci taken from the high to the low of wave 1. The 886 is a rare target for a wave 2 and a common target for a wave B or a wave X, which increases the probabilities that this move to the downside is a wave C or a wave Y, which therefore increases probabilities that sooner or later these highs will be taken. Of course, in this scenario, we're counting this as a 1, right? Then we have a correction. Imagine this is the high of your second wave 2. Now, first of all, this second wave 2 is very long in time. It's much longer than the first wave 2. But if we think about Elliott Wave degrees, the green count is the higher degree Elliott Wave count. Inside the green wave 3, we have the blue count, 1, 2, 3, 4, 5 to finish green 3. So the fact that the blue wave 1 here is longer than the green wave 1, and the fact that the blue wave 2 is longer in price and time as well compared to the green wave 2 lowers the probabilities a little bit for this scenario. But what's interesting here is if we are looking for a flat in 2 and this is the high, then we have a move to the downside, which we then want to count as, again, an internal wave 1, followed by a wave 2, and we want to see a wave 3 to the downside. But you get the point. Over here, another 886 touch, taken from the high to the low, which again, if we are looking for an impulse to the downside, if this is the high of your 2, right, and you look for an impulse down, you want to start with a wave 1, 2, 3 to the downside. But also here, wave 2 retraced to the 886 from the high to the low, which again increases probabilities that any move to the downside is a C or a Y, lowers the probabilities that this is a wave 2, which therefore increases the probabilities that sooner or later these highs will be taken. So locally, it's actually quite difficult to have very, very bearish scenarios where you're going to be looking for much lower prices with an impulse because of the 886s being touched. Now, if we look for a diagonal, then the only diagonal you could really think about is an expanding diagonal, which also someone in the stream mentioned, where in this scenario, you would then have a wave 1, 2, you're going to be looking for a 3, 4, and eventually a 5 of some sort. It's not a nice diagonal. You're going to be looking for an expanding one, But an expanding diagonal again is less common, right? Especially as a leading diagonal where you then start an impulse to the downside. Then again, only if all of the other scenarios fail, an expanding diagonal becomes a likely potential candidate for this range over here. But as long as we don't have more information to validate that potential hypothesis, it doesn't carry the higher probabilities, right? In combination with the 886 touches as well. Now, when we look at the CVD divergences, it is very, very interesting because you can see that this pivot high has 3 CVD divergences, bearish ones. The first one was very, very local over here, lower high on price, higher high on the CVD. This one played out. Then another one with the bounce to the upside, second CVD, also played out because the low here got taken. Very, very nice. Price moving to the upside again, creating CVD divergences, bearish ones, for the third time. Now, based on statistics, the more often you have bearish CVD or bullish CVD with the same pivot, the lower the probabilities of it playing out. It can still play out, right, and take the low. It's just that the more times, the more often you have CVD divs with the same pivot, the lower the probabilities, right? Nonetheless, something very important to keep our eyes on. That is also why I show it in this particular video. If we go to the CVD chart, then you can also see it. Look at the yellow line. Lower high on price, higher high on yellow. Lower high here on price, still much higher high on yellow, and also with the bounce over here. Look at my horizontal cursor line now. We have a lower high on price, but look at my line. We have a higher high on the CVD. The price action here and the CVD here is above my horizontal cursor line. So that again is bearish CVD divergences. And locally, as at the moment of recording, we have a higher low in price and a lower low here on the CVD, which would be very locally bullish CVD divergences. But these would be invalidated if price takes this low, and it plays out if price takes this high. So if we then finally go to the probabilities of the different scenarios, then on the medium time frame, the probabilities are still higher for higher prices to come. The expanding diagonal for potential wave 5 is uncommon, therefore not preferred unless all of the other scenarios fail. And even if we get a move to the downside here, the probabilities are higher. It's a wave C or another corrective structure, which therefore still has higher probabilities to look for higher prices in the future. On the low time frame, however, the probabilities at the moment are neutral. For bearish probabilities, it helps that the 618 here has been touched, which invalidates a potential 1, 2, 1, 2, 3, 4, 5, 4, 5, right? This was the ideal impulsive scenario where we create new highs on lower volume. However, we didn't get it. Price moved to the downside, hit the 0.618, which now means that this has to be an impulse by itself, but that also means that now we have the highest amount of volume in the top. And that is a higher probability for a wave C compared to an impulse, because an extended wave 5 in an impulse is quite rare. However, at the same time, more locally, it is not easy to identify strong impulsive structures to the downside, also because the 886s are hit, both at the high over here and the lower high. The retracement hit the 886, which increases the probabilities that any move to the downside is a corrective structure and therefore increases probabilities to later take the high again. Now also over here, something I haven't shown, if price can flip the blue resistance box, which I mentioned is an important resistance area when price was moving to the upside, if we can flip this box, then I'm looking for price to move to the upside. As long as we are ranging down here, I am not. It's quite simple as that, right? Because for bullish continuation, we now definitely want to see this high taken, right? So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.